Starting. All right, good morning, everyone. Louis Borsellino, Man Over Market. You get to see my face before we start this. Also, let me read this disclaimer so people don't jump in and try to sue me and everybody involved with Man Over Market because they made a bonehead move. All right. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Options, market data, and recommendations are, opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. So now that we have that out of the way, so we got it. Once again, we got a lot of market volatility, and this is based on what's going on in China, right? And you know, when I first started trading, it's amazing the different things that happens when it comes to the markets, right? What is driving the markets? Last year it was oil. Now it's China. So when you look at these markets, you have to understand that you got to know where everybody's hot buttons are right now, right? So they're looking back, they're looking for the contraction, commodity prices at the all-time lows. I was watching Bloomberg today, and they're asking Farber, guy's about probably 80 years old, been around all over. They go, what's a safe asset class? Excuse me. He said, there are no safe asset classes anymore, especially because of quantitative easing. So what he's saying, and what I've been saying actually for the last couple of years, is that when the Fed and the world Feds and the central banks are involved in stabilizing economies and trying to stop disaster, they're going to control their, it's by the printing of money that you're really not creating any value. But this is the game that we're in, so we're going to have to survive all the manipulations and try to make some money in the process. Market going back up right now. S&P is starting to trade up to its highs for the Globex session. Let me start sharing my screen, give you my outlook on what we see here. Okay. All right. So we're at this one right here. Okay. Share. All right. So this is my spaghetti chart, right? This is the chart that we've been looking at for the last. I actually, if you take a look at this, I've been looking at it for since March of this year, right? This had the low, and I was waiting for it to come back and test these lows right in here. All right, this is January, and look, it's no different than what I said when we made this low of 1831. The market is finally putting some volume down in this area between the 50% and the 78.6% retracement, okay, from the all-time high, okay, of up here at 421 or 2134, okay. So here we are, up, down, up, down, up, down. We're going to put some volume, and I think the market is making another spike low. Volatility is up there. The VIX is increased, so we're just we're basically in a trading range. The range is just expanded from 1992. All right, and I think it's going to spike back down to the 18.5 area. This scenario, if we spend a month or two here, or a month and a half going back and forth, and can't break down to the new lows, is what they're going to use to take it in the last part of this year and rally it back, because they've put some foundation down here. There's going to be some consensus. All right, so we take a look at the overnight market. This is on, here we are with the market trying to get back up to the highs of 1939. We've got a low down here of 1907. Okay, so basically, yesterday they took the sell-off on the close, and and drove it down. So we're in a range. We're in a range. We get back to this, we're going to have to basically deal with the range. Okay, looks like that's unfinished. This is yesterday's high of 1939.25. Okay, we got some singles up here from the day before and the overnight. So we're in this range from 1950 down to basically 1850. So you have to wait for the market to make some extremes and then try to, look for failure at the extremes. Okay. I think that that's the key to trading the markets right now. You got to look for failure at extremes. Okay. All right. So that being said, let's go over what I think, let's look at S&Ps for today. Okay. Here's here's a 5-minute chart. Okay. We just took out our 5-minute pivot. Okay. So the 5-minute pivot was right here at just above value at 1930, basically 35 half. So the top of value is 1933 half. We've got the point of control way down here at 1918, 1914 and a quarter down here is the bull bear zone. I'm sorry, 1914 and a quarter is the bottom of value. Bull bear zone is, where at, gentlemen? I don't have it on here. I can't see it. What do we got? Bull bear zone.
1918.
1918. It's right on top of here. That's why you can't see it. So 1918, the bull bear zone is there. Let me make sure I put it in right. That'll be out in orange.
Talking about the S&P bull bear zone?
Yeah.
It's at 1951.75.
Oh, sorry, guys. $1951.75?
Yep.
Oh, that's why I got it in wrong. Yeah. 1951.75. Sorry. Let me put it back in. So the bull bear zone's way up there because there it is. And that's because we got that gap from the opening, right? So when I go back and I look at the day chart only, put this up, here's where we're at. We're trading below the 20-day average of the value area low. Okay, we've got this gap that we've got to deal with from 1963 down to 1940, right? So that to fill that gap, we got to get back up to 1963, and then the 20-day mode is still way up here at 2076. 20-day moving average for the mode is way up there. So the market is going to be in this trading range, as we said, and I just think that it's going to be volatile, and you just got to understand we're going to have a two-sided trade for the rest of the sessions going into the end of the year, right? So here's the Dow. It just took out its 5-minute pivot. We got the Nasdaq took out its 5-minute pivot. If I bring the Russell down here, it's taken out its 5-minute pivot. So on a 5-minute basis, all these markets are short-term on the upswing, rebounding after the dismal performance from China yesterday. So, and the numbers that came out of China. So let's look at the 15-minute pivot. Okay, we are right here. Move that, get it out of my way. So here's the 15-minute pivot. And we're testing it right here at 1940 area. 1940 is the 15-minute pivot. So that's still in a sell. I might always take a look at the 30-minute pivot. And sorry. All right. That's way up at our bull bear zone at 1951.75. So those are still in a sell. So, when we look at this, when I look at these charts, we understand that I use multiple time frames, multiple indicators to keep me on the right side of the market, right? So this is telling me right now, this Hashimoto, that we're above here, we're above the thing, so that right now there is no reason for me to jump in front of this market and say, oh, and pick the top. Let's let the market pick the top, and then we'll jump in after there's some failure, okay? And then we'll go from there. Let's look at some other markets. Take a look at gold. Looks like gold is trading below value. It's also in a range. All right, it's coming back down from those highs that they tried to get above, and they failed up there. Now, gold for me, remember, is a demand product. I don't know if the fact that worldwide commodity prices are in a slump and they're on their lows, if that's the issue with gold. Certainly there's no inflation, so there's not a reason to have it as a hedge against inflation. And with all the devaluations of the currencies, we may, especially in the yuan, that we got the Chinese dumping gold to make up for the devaluation of the currency. So whatever it is, the demand for gold right now is not as strong as it was several months ago. So remember, demand product. We got the bull bear zone up here at 1141.11. 1933 is the bottom of value. 1142.29 is the top of value. Taking a look at gold. Let's put in, bring in the bonds. There's something wrong with my chart. I can't get it to focus here on the top value. So, but bonds kind of steady over the last couple of days. I mean, trading between 155.24. We have a Fed meeting coming up. Fed meeting, I think, next week. So we got the bull bear zone at down in here at we got 150. What do you got as a bull bear zone? Because this chart's screwed up.
154.25.
So 154.25. My chart's screwed up, but the bonds have been in a range here now from 156 down to 153, and I sort of they're on hold until the Fed decides if they're gonna raise rates, which I don't know. I think we're kind of back into a corner. Oil now rallying back inside value. Okay, we got 45.45 is the bottom of value, and we had the bull bear zone and the point of control below the value area low. So that's 45.43, and we have the bull bear zone there also at 45.43. We're back inside value. The top of that is 46.75. So the market looking like it may move back to this area where they fell out of bed here at 46. So look, everybody's got a different opinion about oil. My opinion is the market's going down to the high 20s, and I think that that's where they're going to make this low, and then we'll finally give everybody giving up on the fact that oil's going down. Anyway, we just have too much production and a slowdown, global slowdown, to sustain the oil prices here. And the Saudis have a plan to put much more pain in the producers that they compete with. So we have to understand that that's what's going on. Is there any questions, guys, coming in over the YouTube or anything like that? Remember, you guys can shoot your questions into us, and we'll.
We have Jordan asking about the middle, how you establish your middle. I told him that you use some of your indicators that we'll be discussing when our new program comes out.
When our new trading program, when the new trading program comes out, we will, the people that are in the program will show them how to get to the middle. Actually, this is not an accurate middle from yesterday, because I'll put it out, but by 9:30, 9:45, I'll have the middle out for everybody. Any other questions? Spread the word. We're going to be doing this every morning now, and hopefully you guys can even email your questions in before, and then we'll be able to address them. Like I said, getting up here, we're looking for some pushback, for the market probably to trade back inside value, and you're going to get a two-sided trade today, right? You can't get a formation like this. All right. Let me get to the, right? We can't get our formation that looks like this with all this trading on both sides of the market, with all the volume down in here. to not think that we're just not going to move back into this area today. But I'm not gonna jump in front of that. I'm gonna wait for a failure, which looks like we've had, with the market not taking out the Globex high. Now remember, that's always key for us. That if you don't take out the Globex high or Globex low, to us that's an idea that we think the markets have failed up there. So that's a key point until as we move through all our indicators. Also, look at our average range between the opening and what is the average range high from the opening right now? We put this out on the blog every day.
Open the high 16.5.
So 16.5. So that's telling you that if we open up right here at 1935, okay, that the average high from the opening is about 16 points higher, which would put us to where? Like the 1950 area, right? So, and then the average break has been what?
Right?
Yeah, from low to the low. Opening the low.
Average open to low of 10 days 30.
30?
30, yeah.
So 3,000 points is the average break. So obviously we're in a period of much higher volatility than we're used to. So, but you know what? This is these are the markets that give you the opportunity to make money. So don't get stubborn. We're gonna have a two-sided trade, and we'll see you. Any more questions, Anthony?
Just asking about the program and costs for the program, things like that we haven't discussed yet.
We haven't discussed it, but when it comes out, you're going to be very happy. So,
and then we have a question about, so you're not trading ES long, but waiting for it to fail and then go short.
well, we're actually making highs up here, right? So, my idea is that we have to show some sort of failure up here, and then go, because we're at an extreme, right? Look, there's a reason why they have profile, right? Because they want you to look at, here's volume. This is where all the volume was put in at 1929, and we're now at extreme. We're at an extreme. So, this is value area high. So, typical profile people are telling you, right, that when it gets up in here, if it doesn't keep going, that it should revert back to the mode or the mean, which is down here at 1929. So yes, I would look for this leg of the failure. For this rally. I mean, look, we've come off the high. We've rallied off the low, 1907. Okay, let's look for the breakout of this distribution. I can go right here. Okay, and you take a look at here. I'd be looking right around here. So this is where this market took off from 1927. If we get back in here, 1933, and can't hold this area, I think it would probably, this is why I look at this, right? If I'm up here and I sell it because I think it's too far, there's nothing from stopping. You can't use this as a trading tool. You got to use it as a gauge, but not as a tool. It may go back to 1927 or back in this area, but it could go up here and take these out first. It rallied in 1950. You could sit at 2,000 in your face. So that's why you look for failure before you get into these things. I hope that makes more sense. Any other questions?
What's the difference between the mode and the mean?
The mode is the average price traded, and the mean is so I think value, which is the value area high and value area low, all right, is I think 69 point or 71% of the range, and the mean is the halfway point between the high and the low of value.
Pretty much covers everything.
Pretty much covers everything. Okay.
Till tomorrow.
Till tomorrow. We'll be here every morning, getting ready. Plus, we're recording this and put it out. Okay. Let me see. Let me stop sharing screen. I think that's right here. All right. I just want you to end the day looking at my pretty face for all my female viewers out there. I'll bring Anthony in here and you can see his hair. Got Luke. Come on there, Luke. Give a little hi, give a wave. There's Luke sticking his head there. Come on, Anthony. Come on over. And then we've got all our other people that are, there you go. We got all our people. We got Pat Tabbitt, we got Reed, we got Chris, Charlie. We're all connected all day long on Twitter and Skype. So trying to bring all the information that you guys need. So we're actually moving our offices again to a really awesome studio, and we're going to be expanding our coverage with other people. So hopefully you guys are getting some good information from us. Stay with us on Twitter. It's our fastest way to get to you. And, hopefully you get our trading methodology down and you guys are making some money. So, and always, if you like, email your questions and let's get them in there. So, hot day here in Chicago. It's going to be in the 90s, mid-90s for the rest of the week. Tomorrow, I will be leaving here early to go watch Western Illinois play Eastern Illinois with my son, Baby Joe, number one on the roster, number one in my heart. I can't tell my other kids that, but he is. And then we're going to go kick off the football season tomorrow night at Macomb, Illinois. And then next week we play Illinois. Looking forward to that. They have a lot of turmoil going on with their coach being fired a week before the season. So, all right, everybody, stay with us. And, I promise you the new trading program's coming out. It's going to be a combination of get our indicators. It's going to be a trade funding program and things like that. So we will have an opportunity to be on our team. And if you, get through our testing period, we will be funding traders also. And you'll be part of our whole team. All right, everybody. I want everybody to make some money today. And thanks for tuning in. I'll talk to you later. Bye.